What's up, everybody? We're back with another episode of Bullish Chips, where we talk about chips and only chips. More specifically, how you can use a proven and repeatable strategy to make money every day by trading the triple leverage Bullish Semiconductor ETF, which goes by the ticker symbol SOXL. Make sure you hit the subscribe button and the notification bell. That way you're notified when our videos are released. Make sure you follow us on X at Bullish Chips. Let's get into the agenda for today. We'll just do a quick recap of today's intraday price action and look at the QQQ internals and look at their correlation. We'll then take a quick wide view of SOXL's price action from the week, month, quarter, and year view, and then we'll set our 4-hour triggers and targets for the day, recap the ones for the week and the month and the quarter and the year. So looking at today's intraday price action just on a 5-minute chart for all you scalpers out there, we got the opening print right here at previous high of day. It's kind of hard to see the label in here because overnight high, the previous high of day, and the opening print all overlap. But the rules: looking for higher lows above opening print for calls, looking for lower highs below opening print for puts. Today didn't really give us a whole lot unless you were just scalping on a very short time frame, right? So you could have took this lower high here, even though it was right at opening print. You could have taken it and then gotten the price action to the gap open. If you're familiar with this channel, you'll remember that we always talk about gaps, how they do like to be filled, but many times the first attempt at a gap is rejected or bounced off of, depending on if the gap is above or below. You can see the 4-hour markers that we have here: the overnight high, previous high of day, overnight low, previous low day, and then the 4-hour trigger to the up and the downside. If you're not familiar with this channel, check out our bonus content for our precision trading and charting basics videos. They have a good breakdown of what all these 4-hour markers mean, how we use them in our scalping and day trading or intraday trading, and to use them to our advantage for high percentage trades. Okay, so if you're not familiar with those after this video, go ahead and check those out. If you're not familiar with the numbers that are on these candles, our trading and charting strategy is based in the strat. If you're not familiar with the strat, it's very simple to learn. And by the end of this video, you'll probably have it picked up, but there's only 3 things a candle can do: be a 1 or 2 or 3, and then there's certain combinations. There's 6 main combinations that turn into reversal strats, where there's a very clear entry and a very clear target. There's also patterns that make up continuations, so there's very clear entries, and then you have to use your judgment on price and other indicators you might have them on the chart to know where to get out. One of those other indicators might be broadening formations, which you can see down here, basically just drawing highs to highs and lows to lows. And if you extend those lines, actually, you get to see where price action is going to go to, whether to the upside or downside. So you can use that to your advantage. Again, this is just what our strategy, our charting and trading strategy is based in. We have our own other layers on top of it, like the 4-hour markers that we use to get the precision trading that we use. So whether it be from an intraday perspective or swing trade, long-term trade perspective, that is the base of our trading strategy. So getting back to the chart today, you can see we just played around the opening print basically all day. You could have taken this call to the upside once you got the lower high here on the 5-minute, rejecting off of this the gap open. Basically, you could have grabbed puts, and then you just got a series of lower highs. You ride those down until you get the higher low here, and you go ahead and exit those puts. You can look for the higher low here to get back into calls to swing overnight. We'll look here at when we get a little bit further into the higher time frames why it's not a sure shot thing overnight on the calls, but that's how the day ended. Pretty flat overall, or very flat overall. Basically, almost closing right back on the opening print. So didn't fill the gap to the upside. If we kind of zoom out a little bit, right, we've got the gap to the upside. But what we did do is go 2 up on the week, or go higher than last week's high. So that did lock in the higher low from the week time frame. So let's go ahead and zoom out a little bit. Let's just look at things from the day. And we can see what we've got marked out here. We've got the market makers expected move high up here at 28.64, the low down here at 24.38, coinciding with the quarter flip, the month flip, not much more below that, and this 11 week range that we've been in between 24 and 28 essentially, right? At times we've gone down to the 2250s and 2950, but essentially the range is 24 to 28. We've been buying puts and selling calls at the top, writing those down with time on our contracts to the bottom of the range, and buying calls with time to benefit back to the upside, right? So right now we are in some calls. We did end up rolling the September 19th calls that we had to October 17th, I believe, is the monthly expiration date for October. So we did roll those in good position. We've still got this gap to the top of the range here. So the October just gives us more time, right? So we rolled to a slightly lower strike price, and so that our delta theta ratio is essentially the same as what we already had with the October. I'm sorry, for the Septembers. So just looking to ride those up. We'll hang in them until there's actually a reversal signal back down to the downside, because we may not get a reversal back down to the downside, or if we do, we may just get it back to this year flip and get a higher low here and bounce off of the year flip, right, putting us back into full time frame continuity to the upside. If we look to the upper left hand part of this chart, you can see the time frame continuity indicators. So the day, the week, the month, and the quarter are green. If we can get above that 2813, that flips the year green. Everything is green. That gives the bulls more momentum. We can go try and test, maybe where this daily and weekly broadening formation intersect. May run into a little bit more of sideways or what we call corrective activity around last month's high. Very high chance of that happening, but essentially trying to push up to this weekly broadening formation if we do get the higher low outside of this 11-week range that we've been in. So, but then at the same time, if we do get that signal, we've got this weekly. It's almost a downtrend. It's not necessarily a downtrend line. It's just a lower high line, right? Because we did get a higher low on the week. So you need a higher low and then a lower low. I'm sorry, a lower high and then a lower low to start a downtrend, and we only got the lower high. We didn't get the lower low, so price is actually just consolidating. We could draw an uptrend line there. We've got the downtrend line there, so it's just consolidating along this 26 level, and we're just looking to see if maybe we can break through that, maybe break through the market maker's expected high for the week if we get there soon enough, maybe tomorrow or maybe even Wednesday, and set that higher low. So we can test last month's high. But we are still looking for a possible downturn, and then again, we'll get out of our calls, we'll buy puts, we'll sell calls, and we'll just ride it back down to the bottom. If we don't go back down to the bottom, then that's fine as well, right? We will get some type of push down to get that higher low. Say we get the higher low above last month's 50%, which lines up basically with last quarter's high. Say we get the higher low above here and we get the bounce. Well, we can see the reversal here. We can get out of those puts in profit, and then maybe even buy back the calls if we need to, just depending on how things look, depending on how much time is left on those contracts, and then we can get back into the upside, right? That's the staying nimble, being fluid, being able to work with whatever way direction price action is going to go, because we're in this range, right? Now once we get back into an uptrend like we had here or before that as well, then we can look at other things. But for right now, we've got this very defined range that we've been in for a while. Again, we're in September, October, worst performing months of the year for tech. Chips are a heavyweight in the tech sector, so we can expect more sideways action, if not a little bit of downside action, right? We got this gap down here that we can close as well. Don't want to really pull back below this monthly downtrend line that we fought with for a while. But we could still, if it takes long enough, we could still close this gap and not worry about pulling back below that. So again, just looking ahead, let's go to the week perspective. Let's get a little cleaner chart. So we can see, like I was saying before, we got the 2 up on the week, meaning this week's price action went above last week's price action, where last week was a 2 down because last week's price action went below the previous week's price action. So we've got the 2 up. It's triggering the 2 down, 2 up, targeting the high of the candle to the left of the 2 down. So 29.11 is what we're shooting for the week. That would mean that we flip back the year green and we get above this lower high line that we've got drawn in here on the week perspective. But again, we've got the higher low, just barely. So could call it an equal low, but it's a higher low as well. Looking to get in full time frame continuity, looking to close this gap. So from the week perspective, not too bad. Could have hoped for a little bit more of a green day, a little bit more of a push up, but we did get open up from where we closed on Friday, and we stayed up there, so we didn't pull back, so that can still be considered bullish. Just looking at the month perspective, again, we're still an inside month, or a 1 if you follow the strat. So one of the rules of the strat is you don't make a play on a 1, right? You wait till it either goes 2 up, 2 down, or 3. So right now, from more of a long, mid to long term trading perspective, we're still holding tight. We're not prescribing any go long here till March of next year, June of next year, or anything like that, right? We want to wait till this makes a decision, because even if we go 2 up on the month, that could, depending on how the month finishes, and even if the month finishes bullish, if October is bearish enough, we could trigger the 3 2 up 2 down, which is one of my favorite reversal patterns to trade. Now with that, it would take a pretty big 2 down to trigger that, because and then it would not leave much magnitude to the downside. So maybe we fill that gap and then bounce back up again. But again, until something happens, we're just a 1 and we're not making any actions on that. Now from the quarter perspective, we're still looking good, right? Because we're still in force with the 2 down 2 up, meaning today's price action, or the current price, is above the high of last quarter. So we've got the 2 down 2 up triggered at the, once price action went above last quarter's high, targeting the high of the previous quarter. So we're targeting that 36.15 right up here. Wouldn't close any further gaps to the upside, other than the one that we're bumping our head up against right now. But from a week perspective, it would create a higher high on 2 different levels, I believe. Now for the year, let's get the right thing going here. Same thing that we've been saying for a while. We triggered the 1 2 up 2 down. It didn't reach magnitude, so there's still the threat of, if we have a bad end of the year, maybe we do go fulfill a strat. And with the 1 2 up 2 down, the trigger is the low of this 2 up, and the target is actually the low of the candle to the left of the 1. So that's that 621. We made it to the 723 back on April 7th. So there is still a little bit of room to reach the magnitude of this, but again, that's a long ways to go. We'd have to have a pretty bad third and fourth quarter, but there are gaps to the downside, so there is still the threat of that happening from a long-term perspective. Again, we're not in force, right? If we're talking about in force, so we're not in force anymore, we would have to be below this 2350 in order to be in force. So that's when it would be really more of a threat. But until that happens, we don't need to really worry too much about that, right? So again, from the day perspective, there we have it. Well, or from a high time frame perspective, there we have it. We're in this range still. We've been in it for 11 weeks. I'm saying the same thing. These videos are probably getting pretty boring, but hopefully it's starting to lock in the trading method and the charting method for anybody who's new to this, or new to the strat, or understanding price action. So again, the strat is just one of the simplest ways to understand price action, right? So it's been around for a while. It's tested, true. You can use it on other charts, not just SOXL, but that's the base of our charting method. So we've done that. Let's go ahead and set our triggers and targets for tomorrow. To do that, let's go to the 4-hour. Actually, let's go back to the 5-minute. Let's just talk about it from a scalp day trade perspective. All right. So right now it's pretty compressed. We've got so far, it's not very far into overnight. So overnight high, overnight low are pretty close. But we've got our previous high day up here. We've got our 4-hour trigger to the upside here. We've got the week flip right here, so that would turn the week red if we go below that. And then we've got the 4-hour trigger to the downside and the previous low of day at the same place here at 26.68. So what we have is, if you're looking at it from a scalping perspective, say we open up again with a gap from where we closed, but still within previous day's action, right? Let's go ahead and bring this up. All right, so let's say we open up here. Up here, that's our opening print, right? We're going to be looking for higher lows to get involved on calls. Now, your first target would be previous high a day, not really worth your premium in the contract if you're going to get out right there. Say you get a higher low right at opening print and you get into a call. It's not worth very much. But what we're looking for is the gap close. Now, from a scalping perspective, you do want to think about the half gap, right? So we've looked at many times in the past where, let's just go from here to here. There's been a rejection off of half gap, right? You go up to fill, and then halfway through the gap, it rejects and comes back down. Now, it's usually a short-term intraday move back down, but if you're an intraday trader, a scalper, or a day trader, you want to know about that level. So that 27.69, just kind of keep that in mind. Even if you don't get a full reversal off of that, you may get some sideways action or corrective activity. But again, looking for higher lows above opening print, first target previous high day, second target gap closed, keeping in mind the half gap, and then your third target up here at the year flip. It's been the rejection point for many weeks in the past, so we'll just keep it. It still stays in play, right? So let's get rid of this. All right, so that's what we have to the upside. Now to the downside, we've got it right. If we open up here, we get a little push down. We get a push back up, and you end up getting a lower high down here, and you get it triggers it, locks it in with the 2 down, pushing down. You get in, your first target is going to be overnight high, overnight low, whichever one comes first, which again may not give you very much magnitude, so you're going to probably want to hang in it. Continuing to watch the internals and just price action overall to make sure that it's going to continue going down. If it's going to reverse back up, maybe something you want to get out of if you're a scalper or day trader. But then once again you get to this week flip, that could be a very good support. That's last week's high as well. So if you get some corrective activity, be aware of that there. Then you're looking for any lower highs below this, right? Because then you're turning the week red. The day is going to be red as well. So you're no longer going to have that time frame continuity all the way up to the year. Your day and the week are going to be red. Your month and your quarter are going to be green, and your year is going to be red. So you're going to get some more choppy action, right? Or possibly downside action. So if you get that lower high, or if maybe you don't get the lower high, we just get the straight push down. Your next target is the previous low a day. After that, right, we've got our fib extension out here. We'll be reminded of that here in a minute. But we've got last month's 50%. Last quarter's high. Those are further targets down. But from an intraday perspective, that's how we play it with the 4-hour markers. Again, the overnight high, overnight low will probably be up or down further. Hopefully, we get some good price action overnight because today was real muted. But either way, those if the overnight high and overnight low, either one extends below previous lower day or above previous high day, those are going to be targets on your way as well. But those are your high percentage targets. And if we just look back at today. You can see how you get the higher low there, there's your calls. You get the lower high here, there's your puts, right? You could have got in up here, which is more risk, but you would have had more reward. At the same time, though, if you would have got in here with the lower high right underneath the opening print, you could have taken it down here. Granted, you wouldn't have got very much profit unless you went down to the 1 minute and got your lower high on the 1 minute to get out. But that is how you would play that. Better examples on better days. Again, today we had a little bit of profit. It wasn't a huge day, so the main thing is we brought in some profit, and tomorrow we'll probably have a better example for the next day, right? But that's how you played it from the scalp perspective. Let's go ahead and set our 4-hour triggers and targets and the day triggers and targets as well. Oops, let's get out of this one. So if we go to this chart, right, if we're looking at the 4-hour, we do still have the threat of the 1, 2 up, 2 down, right? It did trigger, but nothing happened. It hammered back up and we turned green. So it's a failed 2 down, right? So, just looking at from that perspective, you would expect a 2 up tomorrow, right? For the 2 down, 2 up. It's a pretty bullish candle. If you're looking at it from the perspective of we did go below Friday's price range, that's about as bullish as you can get. So without going like a green 3 or something like that. So if we do break below the low of the second 4-hour candle of yesterday, so tomorrow if we go below this, we have the 1, 2 up, combo 2 down, and we're targeting again the low to the left of the 1, which is at 25.60 down here. Right, so you would still have a little bit of support, 26.11, 25.84, but ultimately that would be your target, right? So if we go to our notes for tomorrow, right, tomorrow is September 9th. these are from September 8th. There will be 77 trading days left in the year tomorrow. The closing price for SOXL today was 27.08. And then we also, because we got the opening print for the week, we know that at 26.96 the week goes red. At 24.08 this month goes red. 24.38 the quarter goes red, and 28.13 the year goes back green. So we know what our time frame continuity would be. The market maker's expected move was $2.19 plus or minus, where we closed on Friday. So that left us with a range of 28.64 to 24.36. If you're not familiar with the market maker's expected move, check out our weekend video where we go into more detail about where we get that number and how we chart it on the charts. So we do have that range there. And then we do know that we have our gap right above at the 27.43 to 27.96, but we've got some further gaps above where we would push that high later on in the year. And then we've got our gaps below. So just quick glance at our notes. We've got a lot of detailed information within a small area, right? Just from right here, we know exactly what the situation is at the very beginning of the day. So going back to the triggers and targets for the 4 hour, we know that if we go below 26.68, just because we do have those big support levels of last month's 50% line and last quarter's high, those will be our first targets on the way down, but our ultimate target or the magnitude of that move will be 25.60. If we look to the upside, we would have the failed 2 down 2 up that we were talking about. So it triggers if price action goes above the high here, so above 27.14, we're targeting the 27.43. Right, so 27.14 is our trigger. Magnitude is 27.43. We've got our extended target of 27.96, which is the top of the gap, and 28.13, which is the year flip, right? So that's just looking at it from a 4 hour perspective. You don't have to be just looking at the 4 hour, right? If you go ahead and take a look at the 1 hour, say we get a lower high with then a higher low on the 1 hour, you may take the trigger of the lower high and get in a little early because it'll domino into the 4 hour. Maybe we look at the 15. Maybe we get a little push up. We get a higher low here, which pushes up, makes a higher high here, which would also make a higher high on the 1 hour. So you get the kind of domino effect rolling into the 4 hour. You can if you get that comfortable, you can play it like that. So that's why a lot of times we'll be looking at lower time frames and entries on lower time frames, not just based off of the lower time frame, but based off of what they can domino into, right? So if we don't have that domino effect of if we get in on this trigger and this target then triggers the next price level, and then we get to that target for that price for that time frame, and then that triggers a new target for the next time frame, right? Unless we have that domino effect, we're not going to get in on a small time frame, right? But that's how you can play it, right? So just going back to the 4 hour, there's our triggers and targets. We know what we've got. We've got a failed 2 down on the 4 hour. So kind of bullish there. We're still price ended above last week's high. So the week is still green. So looking like we want to go fill that gap and test that year flip again. Not sure that we will flip it. If we do, the market makers do expect that we could get price action up through it, but you can see how a lot of times that just wicks through. There we got a little bit more action, but it pulled back down. So around here we're looking for reversals, but we've got enough time. Again, our contracts are now October's, so we can continue to sit in them a little bit longer than and wait for that signal to the downside if it's going to reverse back up here. Looking at the day, again, we've been in this range for 11 weeks. We've got the 2 up, kind of a doji here, so not the most bullish candle from a day perspective, but it is green. We're above last week's high. We're continuing this uptrend to the upside, and we're trying to fill this gap. So we know that if we do get a reversal, if price action gets below today's low, we've got a 2 up, 2 down. So it triggers at the low of this candle, and we're targeting the low of this candle. Once again, that's last month's 50%, last quarter's high. They're going to come into play as support on the way down if we do go down. So just be patient. Know that we've got to take time to work through those possibly. But if we look at that on the in our notes here, we've got the 2 up, 2 down. We're triggering at 26.68, magnitude of 25.60. we did not fill in our 2611 and 2584. There we go. So on the way down, just because again, those are significant bounce points, we do want to take note of them. So those are our first targets, but our ultimate target here on the day perspective is that 2560. Now you can see how the 4 hour rolls into the day, right? That's a kind of that domino effect type of thing. So that's what we're looking for. Now, if we do go to the downside, that doesn't trigger the downside on the week, right? We're still quite a ways away. And matter of fact, we went 2 up on the week and we're still in force. So this would be a red 3 now if it does go below 2380. But again, we've got our 2 up, 2 down triggers and targets to the downside. If we go back to the upside, we're getting a continuation pattern, right? Not a reversal. So we have the clear entry, and we just have to use our judgment off of previous price action and price levels to judge where our targets are. So we've got some pretty clear ones out here on the chart. We've got our 2813, the year flip, well, of course, the gap close, but then the market makers expected move high, right? So if we get really bullish tomorrow for some reason, right, we got the 2966 up here as well, but I think those are pretty good targets for tomorrow. We do have some economic numbers coming up Wednesday, Thursday, Friday, so you could have some people that aren't, really trying to throw too much money into the market tomorrow, so that's why we may get a push up, but if it is a push up, it may be a little muted, right? We may stop here at this gap close or the year flip, if not reversing back down. So just want to keep that in mind. Looking at it from the week perspective, again, we triggered the failed 2 down, 2 up, locking in the higher low on the week. It triggered at 2697. Again, we're at 2708, so we're in force. And the magnitude of that is 2911. So we do want to see that 2911. If we do see the 2911, we've got our extended targets here. The 2966, which is the higher high on the day and the week perspective. This 3055, which everybody should have ingrained in their mind. If not, let's just take a quick look just to jog everyone's memory. But if we look at the 2020 run up, let's go to the month. Come on. But if we look at the 2020 low to the all-time high and draw the Fibonacci's here, we got the 61.8. We look over to the right, that's that 3055. We're very close to it. So that could be what triggers the 2 up, and maybe we get a failed 2 up because we get a rejection point there. We come back within last month's range, and then in October, if we get 2 down, then we got the 2 up, 2 down, targeting the low of this 3, possibly getting this gap close. Maybe bouncing off of this weekly uptrend line. Who knows? We may even come back down to the 78.6 fib before we bounce. But, we're still a 1 on the month. Rule of the strut, don't make a move on the 1. Let's look at the quarter. Actually, we're not looking at it on the chart. Let's go back to our notes. Oops, there we go. So if we look at our notes, again, we got the 3055 extended target and the 3264, which is a higher high in the week perspective. So from the month, we're in a 3. We haven't made a 2 up or a 2 down yet, right? That's why this is underlined in bold, because we triggered it, which makes it underlined. We're in force, which makes it bold. So we haven't triggered the 2 up or the 2 down. We're still watching that 2257, 2926, or 2966. Basically, the extreme highs and lows of the range that we've been in for 11 weeks. On the quarter, again, we're still in force, 2 down, 2 up, right? We triggered at 2584, so we're still looking for that 3615. Doesn't mean we have to get it this quarter, but it just means that from the quarter perspective time frame, it has triggered. So ultimately, hopefully by the end of the year, maybe the end of first quarter, we reach that 3615, but that's what's triggered. And then on the year, that's the only thing that's really fighting us, because we did trigger the 1, 2 up, 2 down. We did not reach magnitude, but we got close. So we don't want to see anything below that 2350 again, because that puts us back in force here. And that would actually, 2350 is below all of these, right? So that would flip everything red to the full time frame continuity to the downside, giving the bears momentum. So who knows, maybe we do go see that 621. But I doubt that we're going to see it, but those are the triggers and targets for, from a 4 hour perspective, which again, you can use the 15 and the 1 hour to try and look for some type of domino effect of triggers and targets for the higher, the next highest time frame that can roll you into this 4 hour trigger before you actually trigger it. But if you're waiting for the triggers, there's the triggers, the targets, the magnitudes, upside, downside, same with the day, the week, month, quarter, year. So hope everybody has enjoyed this video. I tried not to make it too long, but still involving as much data and information as I can. Didn't look at the internals now that I think of it, so we'll just take a quick peek at those real quick. It's just show the correlation. If you're not familiar with the internals, here's SOXL's price action on a 5-minute time frame. Here's the tick Q, which is just a measure of breadth. Here's the ADQD, which is another measure of breadth. And here's the vol QD, which is volume of money going in versus going out. You can see up here this 400 million level is basically a trend higher zone. That's when you see real strong pushes to the upside. Same with the negative 400 million zone, that's trend lower zone. But again, the 1500 is the trend higher for ADQD, and the 800 and 1000 is the trend higher, negative 800, negative 1000 again for tick. So the breadth pretty consistent along the zero line, money in versus money out. Didn't really do anything till the end of the day where you got some money in. So that's pretty much reflected in the price action here. So again, you don't want to make your trades off of the internals alone, but you want to use this as another tool in your tool chest to help you trade, right? So just another piece of information for you here at the end of the video. Again, I hope everybody liked the video. If you did, please give it a thumbs up. It helps the channel grow. Again, we're not selling anything on this channel. We're just trying to give out free information. Spread the word about the strat, as well as the different levels that we put on for the 4-hour and intraday scalping perspective, and as well as spread the word about SOXL. By no means is it something new. Just like the strat, it's nothing new. It's been out there for a while. But the more people that trade it, the more liquid it gets. So I like that. But anyways, I hope everybody enjoys the rest of their night. Hope you get some good rest tonight. Wake up refreshed tomorrow. And I wish everybody good luck in tomorrow's trading.